I am Carlo Bustos, Educational Programs Leader at Proformative, the online community for corporate finance, accounting, treasury, and related professionals. I'd like to welcome everyone to today's webinar, 2013 Finance Agenda, Moving Toward Borderless Business Services. As traditional boundaries continue to erode, finance leaders have an opportunity to provide value to their enterprises across business units, across countries, and around the globe using a flexible, virtual, data-enabled service delivery model. The Hackett Group's annual key issue study reflects the ongoing pressures and new challenges for borderless business services in 2013 and beyond. As identified by senior finance executives from a wide range of companies globally, their key priorities for the coming year include increasing enterprise-wide standardization of processes and finance technology, deriving more value from data, developing or acquiring finance staff with analytical and service management skills, strengthening the function's partnership with its internal customers and service delivery partners, all of which we will discuss in today's webinar. And now just a few housekeeping items before we do get started. First, I'd like to welcome you back to Proformative. Just a brief overview on Proformative for those of you who may be new to our community. We are the largest growing online community of finance, treasury, accounting, and related professionals. We are an ad-free, noise-free community where we encourage and expect peer-to-peer collaboration. Check it out at proformative.com. And just a few event notes before we do jump in. The link to today's presentation as well as the recording of this webinar will be sent out to all attendees within 24 hours of the event. The presentation is already posted on proformative.com/resources if you'd like to download and follow along. For those of you attending and looking to receive CPE credits, you will need to answer all 3 polling questions during the event today, and you should have pre-registered for it. If you have any questions around CPE credits, please contact Chris Brower at proformative.com. Please ask questions. So we encourage and look to the audience to really fulfill the content and discussion during today's event. We do have a well-rounded subject matter expert on this who's going to share a lot of information. So we'd love for everyone to utilize the questions box in your GoToWebinar panel. Throughout the event, we'll try to get to as many questions during our Q&A session at the end. For whatever reason we do not get to all of them, we will work with the speaker to address your questions directly after the webinar. And lastly, you'll be asked to take a short survey regarding the webinar today, and we greatly appreciate your feedback. In the event, regarding the event today, as we always strive to improve the ROI is for all of the attendees attending. And now just a few learning objectives that we are looking to accomplish during today's event. We're looking to understand the strategic priorities for both the enterprise and finance in 2013 and beyond. We're also looking to learn how finance budgets and staffing are expected to change this year and moving forward. Also look at exploring the 4 imperatives shaping the CFO strategy. And lastly, understanding the impact of new borderless business environment is having on finance. Okay, so let's get started, ladies and gentlemen. I'd like to introduce today's first and only speaker, Jeff Rosengard, Principal and Global Finance Advisory Practice Leader for the Hackett Group. Mr. Rosengard has over 20 years of experience in working with senior executives to assist them in creating world-class organizations. In addition to his expertise in functional performance, Mr. Rosengard's expertise extends to strategic planning, benchmarking, process measurement, and technology planning. He is a published authority on these topics and a frequent lecturer at industry and professional conferences. Mr. Rosengard has a guiding role in development of Hackett's benchmark studies in finance, information technology, HR, procurement, and SG&A. As a CPA, he has worked with senior executives at such companies as AT&T, Avon Products, Bosch & Lomb, Ford Motor Company, and TRW. Jeff, the floor is yours.
Great. Thank you, Carlo. Over the course of today's session, we're going to really have a discussion about what is world-class, what are they doing differently, and then what is the subsequent advantage that they're realizing as compared to everybody else. Just a brief overview of Hackett. Hackett is an IP-based consultancy, and what we focus on is helping clients understand how is their performance today and how does that compare to their peer group and to world class. And it's more than just having numbers as it relates to your costs and your staffing levels, but what are those practices that the world-class organizations are employing from a best practice perspective, and then how are they implementing those best practices and what are the lessons learned across the entire journey. And we'll be highlighting many of these over today's discussion. So first off, let's talk a little bit broader about G&A. First of all, as the headline of our presentation really hinted at, borderless environment. It is a very exciting time, and finally, some of the key barriers to change, key barriers to many of our organizations' ability to achieve that top performance, a lot of those are starting to break down. First is from a global perspective. We're seeing companies are evolving now from being more than just a multinational, having operations in a lot of different countries, to actually thinking and running their enterprise as a global business. And we'll talk a little bit more as we go through that, but it's where my product is being sourced. I'm looking at what's the best place to source our product on a global basis. Talent, where's the best talent? Doesn't always have to come from where our headquarters may be located, but really looking at my talent from a much broader basis, as well as any other products and services. The second area that's starting to break down rapidly is the historical functional silos. And what we mean by that is finance as being a silo, HR as being a silo, procurement being a silo, and so on. What we're seeing now is that companies are starting to look at how do I best improve my performance, and it's more than just, again, cost-driven, but it's really on, based on how do I drive and improve my effectiveness. So they're looking at their business more from an end-to-end process, and that may mean from procure to pay as an example of an end-to-end process, customer to cash, and we're even seeing some clients taking it all the way to the beginning from the quoting process to cash. And that's a very, very important distinction, because it's important that any decisions that are made, and maybe to how do I increase my sales, that at the back end of the process, the credit areas, the collection areas are involved in that to ensure that the solution that is going to be employed to meet that goal of increasing sales is done in a manner that they're going to be more profitable sales. The last area is the service placement. Thinking globally again, we're evolving from centralized services to shared services, which many of you have, I'm sure, have implemented in some degree, to more of a broader global business services. And business services really is defined, and we'll talk a little bit later, is multiple functions. But the key difference is the term global. Global means making decisions and governing all that work on a global basis from a single organizational entity. It means determining where should that work be performed, leveraging whether it's a lower cost countries or a certain concentration of skills that may be in a certain area, but it's done in the overall benefit of the enterprise. So the service placement is really addressing what are the type of needs and services, for example, in the finance organization, how should I be aligned to better support the business? And it's really driving a lot of changes as it relates to the type of work and the type of skills that are being needed. And we'll talk about that as we go through this discussion. Well, I thought we'd start off with some good news. You know, especially after the last 3 years of the most recent economic downturn, where we saw costs as a percent of revenue were actually increasing, and that was the result of companies not able to keep their costs in line with the decline that they had in revenue, which we refer to as agility. And in the Hackett's benchmarks, where this information is coming from, it's a 2-year, you know, what we call a look-back window or lagging indicator. So now revenues certainly have gone up, and companies are continuing to look at their cost structure. But the key is the agility, and that's the leading organizations took advantage of the most recent recession to make some structural changes that may otherwise have been difficult when times are good. So as you look at from 2011 to 2012, we had a 9% decline as far as cost as a percent of revenue. And what we're projecting going forward is that there will be a compounded annual growth rate of a little over 3%. And that growth is going to be gained by organizations able to grow the top line while at the same time either keeping their costs flat and, as you'll see in a moment, in many cases actually continue to improve their efficiency across their enterprise. So part of our key issue studies that Carlo mentioned is that, every year we ask C-level executives what's top of mind, where is their focus. And in last year when we asked those executives, the top item was is focusing on improving and accelerating revenue growth. As you can see, it's still very important, where 88% of respondents indicated that that objective is extremely important or an important strategy. So that's the data that we have here. But again, the focus is continuing to be on how do I improve my operating margin, and really it's how do I put in a structure that allows me to be more agile, to be able to be responsive if there is another downturn, to be able to rationalize my costs much quicker, to reduce that gap between revenue decline and decline in cost. But at the same time, as you grow, to be able to grow in a much more profitable manner. And that's, again, by taking a step back and looking at your organization more from a global-based organization versus regional, or just looking at it from a business unit perspective. So the areas that have the largest increase, and this ties into the revenue growth, but at the same time it improves, or it relates very closely to how do I improve the effectiveness of my processes, which is the focus on customer service and satisfaction. More and more companies are actually reaching out to their customers of how can I make it easier for you to do business with my organization. And that's something that really hasn't been done as much as you would expect in the past. Constantly looking at how to be more agile and flexible so that you can take advantage of those market opportunities that exist, the ability to rapidly make an acquisition and to assimilate that organization much more quickly to realize the anticipated financial synergies as a result of that decision. Now, this was an interesting analysis that we had. We asked our clients, what's the estimated percentage change that they expect from 2012 to 2013 for their staffing and their operating budget. So if you look on the left side of the slide here, is that across G&A, so finance, HR, procurement, and IT, in all cases they're looking at reducing headcount. And from an operating budget, with the exception of IT, they're all expecting their overall budget to go down. So it's not a function of, well, my headcount's going to go down because I'm going to outsource. They really are looking at continue to reduce the operating budget. So there's still this pursuit of how can I take the self-inflicted complexity out of my organization while at the same time adding more value. Now you look at where the challenge really presents itself is on the right side. Pretty much across the board, pretty significant expectations that revenue is going to go up, slightly less going from 2012 to 2013 than what we saw from 2011 to 2012. So revenue's going up, but at the same time, we're going to could have a very significant gap if you don't change how you're currently supporting the business. Is how do I improve that productivity without adding, and in most cases, how do I do it by reducing the cost? So that's the challenge that most organizations are going to be facing. And what we want to talk about as we go through the rest of this presentation is, so what are those world-class organizations doing differently that's going to allow them to meet that expectation of the business? So the first from across, again, across G&A, highlighted three major areas that really is reflecting taking a global view. Certainly a lot more spending. There's been a lot of pent-up demand from a technology perspective. So as you can see, a current increase of over 50% in spending in IT, but the key goal is that, and then the light blue is getting to a level of over 80% of their performance, and in the way they're managing those areas, it's truly going to be global versus regional or by product line or business unit. So pretty significant change there. The second area is on key performance indicators and reporting. Trying to drive consistency across the globe about what is being reported on. You know, at the same time looking at trying to drive a lot more standardization across the business as it relates to the type of reports. We know that there's a pretty significant difference between world-class and peer group as it relates to the number of reports. World-class organizations are much more focused and are reporting on key performance indicators and metrics that closely tie to the overall business strategy, and versus having thousands and thousands of reports created. So a much closer tie from business strategy to critical success factors to what are the measures for those critical success factors and how does that cascade down into each one of the functional areas. The last area that we want to highlight, and as you can see it's an 80% planned increase, is to achieve true data standardization, so master data management. You know, a lot of these aren't a new topic, but the focus is what's new. And the emphasis about achieving really true data standardization across the globe is really going to help companies get a much better return out of the technology, and it's certainly going to be a key enabler to providing a lot more consistency and integrity across the reporting environment. So the real issue at hand is, it sounds good, it sounds relatively simple about achieving global standards, but as many of you know, it's maybe a simple concept, but certainly it's difficult to realize. So when we asked our clients, how global are your business functions, and breaking it down as it relates to the light blue again being the maximum global level that's achievable, so over 80% of that specific area is really managed on a global basis. So policies and strategies, so going from 15% to 40%, and really growing it from 54% to 67% of the respondents saying that they're really going to be predominantly global, if not really totally global, as it relates to their policies and their strategies. From a function management, the function management is defined as the management of the finance organization, the management of HR, but again, on a global basis. You know, in many cases, the finance parts of the finance organization really don't report directly up through the CFO. But as you can see, a fairly dramatic shift is going to start to occur to really strengthen that alignment across the business. And that's important from not just from a data perspective or integrity from a financial reporting perspective. It's very important from a talent management, talent development, to be able to have that alignment and vision and managing that on a global basis. And just the last one is from a process design perspective, really looking at how can I truly standardize my processes while respecting and understanding and addressing the corresponding best practices and local requirements. So there's a polling question. Carla?
Thank you for those insights, Jeff. I appreciate it. So we will be launching our first of 3 polling questions. Everyone should be seeing this momentarily on your screen. And while all of you are answering, I just want to take this time and remind everyone, for those of you attending today's webinar for CPE credit, you must take all 3 polling questions to receive full credit. But we urge all participants to answer the polling questions as they are statistical in nature, and we will try to share the results at the end if time allows. I also want to take this time to remind everyone to utilize their questions box within the GoToWebinar panel for our Q&A session. If you do have questions and we have a chance, we could definitely ask those questions throughout the presentation, but we would love to leave those for the last 10 minutes of our Q&A at the end of the webinar. So I'm going to give everyone about another 2 seconds here before closing this down and giving it back to Jeff here. It's all yours, Jeff.
Okay, great. So let's talk about world-class. I mentioned at the front end that Hackett is defined world-class. Specifically, our definition is those organizations that achieve first quartile performance in efficiency and first quartile performance in effectiveness. And if you look on the right-hand side with the Hackett value grid, those world-class organizations represent about 9 to 11% of all the organizations that go through our studies. It's important to know where you're at today. You can be highly efficient and fairly low in effectiveness, so getting that balance is extremely important. And either if you're effectiveness-oriented organization or if you're biased towards efficiency, both those allow you to achieve world-class performance. And the big difference is that from an efficiency perspective is how do I take out that self-inflicted complexity. It's not just about reducing cost. It's about taking that complexity, if you're looking from a staffing perspective of how fragmented your staffing is, or how many applications AP applications may you have across your enterprise, and matching that up from an effectiveness perspective of really driving true value to the rest of the organization. To quantify it for you, you can see that on the bottom that world-class organizations enjoy a significant cost advantage to the peer group. Now, that doesn't come at a compromise or sacrifice for effectiveness. As you can see in the top across G&A, even though world-class finance organizations have almost a 50% cost advantage, they're actually driving significantly more value. So if you take, for example, those world-class organizations that have a high utilization of EPM or enterprise performance management best practices, their organizations are achieving a much more significantly higher EBITDA versus their industry peers. And it's also their ability to anticipate and predict performance gives them a significant advantage over everybody else. Now, our clients asked us, so you talk about world-class a lot, what are they doing differently? So when we went back and studied world-class organizations, we found that there were 7 key areas and characteristics that all of them had, and that's what we're referring to as the service delivery model that you see in the middle. So those 7 components, they looked at it from a very holistic manner. It wasn't just about how should I design my processes. It's also about what's the information I need to make business decisions. What's the information that I need to better manage those processes? Where should the work be performed? It's more than just do I insource or outsource it. It may be better leveraging self-service. It may be pushing some of that work upstream across the value chain. It may also be towards some of your other trading partners. The technology, it's really truly the enabler. There's no silver bullet here, but is how do I best leverage the technology? The one thing that our clients mentioned that they wish they would have emphasized more during their transformation is on the skills and talent area. As you go through and achieve that world-class performance and you really are moving work and looking at how can I better add more value to the business from a finance perspective, the skills that you're going to need are going to be very different. And they wish they addressed identifying what are those core competencies that are going to be needed, the corresponding skills, and putting together a more proactive learning and development program in order to support those future needs. So we talked about the holistic change about world-class organizations. This is actually providing you some specific data of what they're doing differently. As you can see in the light blue, those top performing organizations are spending significantly more emphasis in making changes to how they manage their talent pool. It's not just the ability to attract the top talent, how do I develop it as well as to retain it. They're focusing much more on driving process standardization. They're really looking at where's the best place to have the work performed. And again, the focus is not just how can I realize enhanced scale benefits. They're looking for develop more concentrations of skill, which is going to allow them to be much more effective in those specific areas. So they've been a lot more aggressive as it relates to what work is best being shared. And then, as you can see from a technology side, fairly equal. But what's interesting, when you look at the difference between peer and world class, peers believe that IT is the #1 lever to drive service delivery model change. And the top performers really are looking at it much more holistically and view technology as that enabler, not the driver. Now, let's talk about what are world-class organizations doing to reduce some of this complexity. So it's all about reducing work, not working harder. So on the left-hand side, world-class organizations have been a lot more effective in reducing the number of legal entities. They've been more aggressive at looking at a legal entity structure that may have been put in place 10, 15, 20 years ago, and so some of the original benefits gained from having a legal entity, a specific legal entity, may have gone away. Now, we did a study a couple years ago about legal entities, and what we found is that the cost associated with having more legal entities is very significant and really is a primary contributor to the ability of world class to reduce their finance costs and their performance and enhance their performance by almost 50%. I mentioned about business performance reports. It's not about making it more efficient to provide more reports. It's about being focused, providing the information that the business needs to make a business decision. And this is something that I'm sure everyone has gone through. When you have a request for a certain piece of information, a certain report that becomes part of that standard reporting catalog. It's also important to emphasize it's not about automating all of these. It's really, you're not eliminating information, but what you're delivering to your business partners should be a lot more focused and related to the decisions that they're making. The last area is looking at the number of financial applications. So going across their enterprise and how can they reduce the number of general ledger systems, the number of accounts payable systems, for example. They've been much more effective in reducing that complexity. Will they get to one? That'll depend. But getting it to a very small number of applications allows you to really drive that true global master data management capability. It allows you to provide an enhanced ability to support your global customers. So for 2013, based on the input that we had from our clients, there's 3 primary areas that the world-class organizations and really all our leading finance organizations, what they're focusing on here in 2013. One is really to step back and really define what is the vision. Where do you want your finance organization to take to be in 2 to 3 years? And it's more than just looking at what my cost level should be. It's really stepping back and taking a much broader view on how can I add more value? What is the role of finance? And then that's really has really been pretty key from a structural perspective. The second area is on delivering on the value proposition of how can I add more value as it relates to the insights and the analysis as it relates to the performance. As you can see, our top performers in EPM, and we talked about a little bit before, 64% of are outperforming their industry peers. But they're doing it by reporting on the right information and providing it at the right time. But they're also doing it in a manner that it is efficient so they can spend significantly more time doing the analysis than compiling and creating the reports off of spreadsheets. And then the last area is how can I better leverage shared services, which we'll talk about in a few moments, about better leveraging more of a global business services. We know that all the world-class organizations are leveraging shared services. and that they are achieving a 58% cost advantage when you look at those transaction processing areas. So let's talk about the finance organization and better anticipating the future. We know that world-class, as I mentioned, is spending or investing about half their cost compared to everybody else in finance. Secondly, when we talk about decision support, a lot of companies will feel good, I'm spending significantly more time on decision support activities, reporting and analytical activities than everybody else. But when we drill down, we find that the world-class organizations are spending 30% more time on the analysis versus collecting the data. When you look at it historically, and this really highlights the benefit and the advantage that world-class organizations have. So when we started our studies in the very early 90s, you could see the gap between world-class and everybody else has been increasing over time and has stabilized a little bit over the last 5 or 6 years. But the biggest takeaway that you have from this chart is that when there's been a major event, whether it's Sarbanes-Oxley or the most recent financial crisis, the impact of that event was significantly less, if not at all, for world-class organizations, where the peers actually realized a significant impact, especially as it relates to the cost to support the requirements in Sarbanes-Oxley. So by better leveraging best practices and by having a structure in place that allows you to be more agile, those world-class companies are able to respond to an event that maybe they couldn't anticipate, but they have the proper structure in place to do that. So although cost is a high priority, it shouldn't just be the focus, because it's easy to cut costs. It's very difficult to sustain that cost level. So when we ask CFOs what's top of mind, the data, the reporting, and the analysis really is at the top of the list. So what should I be reporting on? How is that best aligned to the overall business strategy? But they're really being that what I'll refer to as an information architect across the business to ensure that there's alignment from that strategic operating plan down to each business and each functional area's specific business plan. It's also, you can also see that they really are looking at how can I improve my cost structure. And again, they're doing that by reducing complexity. They're better leveraging technology than they've had before. So most of these organizations have the technology, but they aren't leveraging it properly. And then the last key piece is really looking at it from a talent management perspective, which we've highlighted. So when we asked CFOs as far as what major transformations are you planning over the next 2 to 3 years, you can see at the top of the list is really addressing the work that's currently being performed, really challenging how can we be much more consistent, how can we take away a lot of the exceptions that may riddle a lot of our processes. So as you can see, threefold as far as more emphasis being placed on truly achieving global financial policies and standards, as well as achieving a global process design and structure. And that really is being enabled by a very strong business services organization. The second area is from a technology perspective, which is really rationalizing the current technology portfolio, but at the same time gaining agreement on how am I going to find a customer so that I can really do a true analysis across the globe. And then lastly, and this is a very significant, we've talked about talent management, we've talked about the importance of our people. What we're seeing now going forward, or in the last year or two as well as going forward, the top performing finance organizations are actually making those investments now into those into their people and into their organizations. Carlo, do you want to bring up the next polling question?
Yeah, thank you for that, Jeff. And we will be launching here our second of 3 polling questions. Everyone should be seeing this momentarily on their screens. And again, just please note that those of you in today's audience who are after CPE credit, you will need to answer all 3 of our polling questions. At this time, I also want to remind you to ask questions in our GoToWebinar or your questions box within your GoToWebinar panel for our Q&A session. I know we are working up towards that here momentarily, and I know Jeff has a few more interesting tidbits and insights to share with all of you. So we're definitely looking forward to a robust Q&A here, time allowing. So I'm just going to give everyone about another 10 seconds here before we do close this up and move on. Jeff, it's all yours.
Great. Now let's evolve from talking about broad across G&A to what are world-class finance organizations doing and what we're referring to as the playbook. So depending upon, if you look on the left side of the chart, how complex your organization is, how complex your business is, whether it's from a structural perspective of being a single product business line, or you're operating in over 100 different countries, you're making a lot of significant acquisitions, what we found is that there really are 6 dominant areas or focus of what companies are doing to achieve world-class performance. So whether it's better understanding not just the needs of the business, but how am I best aligned to support the business, achieving true enterprise standardization, accelerating the leverage of business services, being much more proactive from a talent perspective versus reactive. How do I get a better return out of the technology investment that I'm making? And then lastly, being much more effective at making forward-thinking decisions and help your specific organization better anticipate the future. So just first off, as far as not just understanding what the needs are, but how many of you really have gone out and asked the question, what does the business expect for finance? And if you kind of look at this hierarchy, obviously everyone expects that our reporting has a high level of integrity, we're in compliance with your internal policies as well as any external regulations. From that is certainly how can I be more efficient. So these are really just the day-to-day expectations. I don't think these are anything that's new, but first I've got to have the controls and the integrity. I need to be as efficient as possible through standardization and automation and centralization. And then it's really how can I start to drive more value, whether it's improving your cash flows through more effective working capital management, having a more highly effective tax strategy. It's allowing you to drive down your effective tax rate. The integrated planning is providing the leadership to, again, translate where's the business want to be overall, whether it's increasing market share or hitting a certain revenue size, working with the business and how to truly enable that. The concept of enterprise risk management, and as you start to evolve from now being just a strong finance person, but how am I going to add incremental benefits to the business above what their traditional expectations are, we're seeing a lot more finance organizations taking a broader responsibility as it relates to risk. So evolving more from just managing interest rate risk and foreign exchange risk to looking at the broad business drivers and what's really influencing the profitability of the overall enterprise. And then lastly is the ability to help the organization better anticipate opportunities, better anticipate some future challenges. So it's that forward thinking, taking that good finance knowledge combined with strong business knowledge, and you'll see in a few moments that there's still a fairly wide gap of how many finance professionals really have a good understanding as it relates to the business operations. Now, we've talked about cost. This is just an illustration. If we take a $10 billion company and it's comprised of 10 units at $1 billion each. And if they're not really operating as a global organization, what you're finding is that they're at a $30 million cost disadvantage by running it from a more autonomous manner versus consolidated. And all we're focusing on here in this analysis is what we'll refer to as more of your traditional transaction processing area. So that's your general accounting, your disbursements area, your core reporting, and audit. So just taking a subset of a couple of finance processes, there is a substantial improvement by really operating as more of an integrated business. And a lot of you are probably having discussions about what's core and what's not core. As you'll see, these are areas that you could say are not core to the success of any of your specific businesses. Another example as far as achieving more of the enterprise process and data standardization, the question was asked here is that to what degree do you have a standard set of procedures that everybody across your globe is following, whether it's via shared services centers or that you've outsourced. As you can see, world-class, significantly much more standardized than everybody else. Now let's talk a little bit more about common data standards. So as you can see across the bottom, world-class organizations do have more of a centralized, maintained, and standard chart of accounts, or data warehouses and those type of things. But look at the impact. So standardization isn't just a good idea. It actually does drive down complexity and actually allows those top-performing organizations to really realize a very significant cost advantage, well over 1% of your revenue between where world-class is from a data standardization perspective to those organizations have a low level of data standardization. Now, global business services, this is the evolution past shared services. What we found is that 2/3 of all of our GBS organizations are reporting savings of over 20% to the enterprise. And then another 1/3 of those world-class organizations are actually driving savings over 40%. So it is proven to be effective for driving costs, but it's more than just getting costs as it relates to scale benefits. It really is driving more benefit as it relates to being a key enabler to getting enterprise-wide data standardization. And one of the characteristics of a top-performing global business services organization is that they have multiple functions. So 3/4 of GBS organizations have more than one function resident in there. So it may be finance and IT or finance and HR. And then lastly, and this is what I was alluding to, it's more than just scale benefit. It's actually, when we looked at those world-class GBS organizations, they're driving 5 times service and quality improvement relative to everybody else. Early on, talked about agility. GBS is really one of the key enablers for driving agility. As you can see, those organizations have over 6 times the ability to help the overall enterprise be more agile, to quickly integrate acquisitions, to realize the savings expected from those acquisitions, while at the same time, if there is a downturn, to be able to ratchet down the cost much more quickly and much more effective than everybody else. On this slide here, we really talk about the evolution of global business services. And what we've done is we've broken it out into 3 different stages. So still probably half the organizations are still in stage 1, more of a functionally oriented service center. Early stages where I've taken a couple of the core transaction processes, accounts payable and accounts receivable and general accounting, for example, and are really driving that on a regional basis and maybe sometimes global basis. But as you go up the evolution, it's multiple functions that are not just driving lower costs, but significantly better value, higher quality to the overall enterprise, as well as to the customers and the other trading partners that you may have. And as you look at what are the value, so if you identify what are the total opportunity, both from a cost and outside value generated, and outside value can be defined as improved ability to manage working capital, you can see that that at stage 1, you're driving about a third of what the potential opportunity may be, and that almost doubles as you go into stage 2 and increases significantly again when you go into stage 3. So it's all about enabling the business strategy, providing much better analytics in a much timelier manner, the ability to improve the quality of your transactions, and lastly, obviously, to reduce costs. So quickly, I'm going to go through talent management. Not that it's not important, but as you can see, CFOs are really concerned about talent, and that they're spending significant more time on not just attracting and retaining, but developing, and ensuring that the skills are much better aligned to what the business is needing. So when we look at it from a core finance skill perspective, or from a general business skills perspective, you can see a fairly wide gap exists between achieving that balance. So what we're seeing is that there's still a gap. There's a lot of importance being placed on having finance professionals that have a very strong business acumen, their ability to solve broad business problems, the ability to manage a process change and bring in strategic thinking. A very large imbalance or large gap exists. So this is where finance organizations are placing a lot of emphasis. When you look at it as far as for the core finance skills, pretty much in alignment. So that's the good news. Still more of an opportunity and need to really bring in that operating knowledge of the business with your strong financial knowledge and expertise that you may have, but bringing that and closing the gap as it relates to the financial planning, helping the business better anticipate where their opportunities are for improvement to seize any market opportunities that may exist. So as you can see, it's not just talk anymore. We're seeing that finance organizations spent 57% more time last year on their workforce planning than a year ago, and increasing that to 68%. The concern, though, is that there is more effort, but still over half finance organizations haven't truly identified the specific skills that are needed and gone down to an individual by individual level to really know how their skills match up to what the skills are going to be needed in the future. From IT enablement, as you can see here, fewer is better. So the ability to reduce the number of applications, reduce the complexity in the application portfolio is really driving significant benefit, and you can see the correlation to being more productive. Last thing here from an IT perspective, the cost advantage is resulting in getting a much more higher utilization of electronics, whether it's automating the customer invoices or supplier invoices. But the key is not just having the automation there, because many of you do have that capability, but it's also working with the trading partners, and that's the role that finance really can play a much more active role in driving that linkage to making it easy for your customers to do business with your organization, or saying it differently, making it more difficult for them to go somewhere else. So as you can see, by the cost advantage exists, but more importantly, the effectiveness advantage, the ability to drive down errors, the ability to build quicker and reduce cycle times. Lastly, to talk about EPM. The key is really looking at it from a broader perspective, the ability to certainly understand, help the business plan, but how am I going to make sure that what we're planning is going to match up to how we're executing. So the top performing organizations are really stepping back and looking at how can I better align the goals and the behaviors of the organization? And a good example will be is that if your business plan included doubling the sales force in a specific region as a way to increase your market penetration, if after the first quarter results seem to be a little bit less than what you expected and may have been the result of a competitor driving down their pricing, if you make a decision and say, I'm not going to hire any more salespeople, that actually was a change in strategy. Finance needs to make sure that the organization understands that that was a change in strategy, not just a cost management technique. And as you can see, and we've talked about this already, and I will skip through this, but that enterprise performance management really is the most important area for the finance organization. It really is where they're getting the most attention. We talked about the result of being world-class from an EPM perspective and driving much better EBITDA. We also found that forecast accuracy is almost double between top performers and peers. And they're doing it at a lower cost, again, by taking out the complexity, reducing the amount of work and not working harder is allowing them to achieve that performance. And it's also resulting in a much shorter cycle time, the ability to report on the results in a much quicker manner. So just in closing, the journey's always been very consistent. As you look at this, it sounds very straightforward. You want to make sure that you understand the strategy of the enterprise and that you're aligned to it. But it's really, truly all about elimination. It's not automating something that you shouldn't be doing at all, and it's simplifying it by taking out that complexity, whether that's reducing the complexity in your application portfolio or reducing the number of handoffs that it takes to approve a certain transaction, standardizing it globally, and then as you look at your enablers, determining which is the best enabler for you, whether it's changing your organization, alignment of where work's being performed, driving standardization through your process, or using major technology investment. We've seen that the alignment and the change in the organization of people may be the most effective enabler that you have, and then determining where should that work be performed, to what degree should it be in a shared service organization, to what degree should it maybe be outsourced. And the key, again, is achieving scale, but at the same time concentrations of skill. So lastly, there's not one approach, there is a dominant approach. What we know is that the journey is going to be different, but it's important to have a very specific globalization strategy and how you're going to leverage your ability and your presence from a global perspective. You should also know that others are going to be doing this, and they're really obsessed and doing in everything they do as far as how do I best leverage my global presence. And candidly, we're seeing that this will be the most crucial imperative of achieving true global alignment across finance and across the enterprise over the next 5 to 10 years. Carla?
Thank you, Jeff, for those interesting insights from the key issue study. We really appreciate you taking the time today. And we do have a few questions. I want to take this time to let everyone know we are going to open it up for Q&A now for a few minutes. And we'll try to get to everyone's question. And if not, we will work with Jeff to respond to you directly post the event. So one question, it's a little bit broad, Jeff, so if you can just give us kind of a quick breakdown on it. But when is the right time for a organization to, not only identify kind of the strategic perspective of the enterprise and make the changes that you've just identified a couple slides ago, but when is the right time? Is beginning of the year, middle of the year, end of the year, or are they waiting for that catalyst to just throw them into it and have no other choice?
Well, there never is a good time, but the best time is to start to drive and plan this change when you don't have to. That is actually the most difficult time because you don't have that burning platform that can align the organization. We have found that over the most, recent economic crisis, a lot of the best companies really took advantage of that. Changes that they made in how they were aligned organizationally probably couldn't have been done to the degree that they did as far as in really leveraging global business services to the degree they had, or to really drive true standardization across their application portfolio. Without that catalyst, they may not have been able to do it. But waiting for that event is very risky, because what may happen is that you waited so long and now you do have the gun to your head, and now you have to do more of a slashing, which usually can cause not both near-term but also long-term damage.
I definitely agree with that. And then one more question before we do wrap up, and apologies, we just kind of are getting close to our time here. But a follow-on to that question, what is the time? How long does it take for a finance organization to really transform and meet the strategic vision of an enterprise? Is it 6 months, a year, or is that journey never ending and it's always continuous improvement?
Well, the journey never ends. What we know is that even once you achieve world class, if you just keep doing the same things you are and don't continuously improve, you'll fall back and you'll fall out of world class. So the journey never ends. It's important to know where you're at today relative to where you want to be, and that may be resolved by incremental improvement, or you may find that the gap is so significant it'll take a more radical change. We're seeing that based on the investments that a lot of companies have made today, that in technology as well as into shared or business services, we're seeing that potential to shrink that time frame down is pretty significant. So for those organizations that have made those type of investments but aren't leveraging it, that could be roughly around a 2 to 4 year window. For those organizations that don't have those key enablers, it can be double the amount of time, if not more.
Wow, that's great. Thank you, Jeff, for that. And unfortunately, we are at our time here to kind of wrap things up. And just a last few housekeeping items before we do end today's webinar and get to our last polling question. Just want to remind everyone at the end of the webinar, you will be prompted to participate in a short survey. We truly value your feedback and appreciate your time to help us continue to deliver this great content. At that time, you can easily request to connect with Jeff with the click of a mouse as well. We also ask you to please join us and continue this discussion on Proformative.com. And if you have any questions regarding CPE, please contact Chris Brower at Proformative.com. We also just wanted to let everyone know about our CFO Dimensions Conference coming up in late August, August 21st and 22nd in New York City. It's really focused around the CFO and all alike, the strategic leadership in finance, the next step. And it's really bringing in world-class leaders and practitioners to really discuss and share their case studies, journeys, and best practices around this. And with that, I'd like to go ahead and launch our third and final polling question before we end today. Everyone should be seeing this here momentarily on their screen. And I'd like to take this time to thank you, the audience, for your time and your attendance and the great questions. And I will go ahead and give you guys a few seconds to answer this last question. At the end, I will go ahead and close out the webinar, and you'll be prompted to take the short survey. We can please ask you to participate. We really value your feedback. And also there, you'll be able to request a connection to Jeff and also request more information on the CFO Dimensions with the click of your mouse. I'll leave it open just for a few more seconds here, and I'd like to thank Jeff again for your time and insights, and thank you, the audience. We hope to see you again on another Proformative event or online at Proformative.com. Have a great rest of the day, folks. Goodbye.